Hey, I'm Ryan Reynolds. At Mint Mobile, we like to do the opposite of what Big Wireless does. They charge you a lot, we charge you a little. So naturally, when they announced they'd be raising their prices due to inflation, we decided to deflate our prices due to not hating you. That's right. We're cutting the price of Mint Unlimited from $30 a month to just $15 a month. Give it a try at mintmobile.com/switch.
New activation and upfront payment for 3-month plan required. Taxes and fees extra. Additional restrictions apply. See mintmobile.com for full terms.
Stocks for beginners. Phil Muscatello and FinPods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation.
Because charts always keep going up and down, and so do our emotions also go up and down with the chart. Because if you're in a stock, it's going up in your favor and you're feeling really excited, you're really happy. And then suddenly comes a big red bar, and then the stock starts pulling back down. You're like, oh my God, why is this happening to me? And then you start being negative. This always seems to happen on my trades. I don't know why, what's wrong with me? And then you see it go back up again, and you're like happy again. So it's that roller coaster, and research has proven that trading releases the same hormones of dopamine and serotonin, the same ones that people get from gambling and doing all sorts of activities.
Hi, and welcome back to Stocks for Beginners. I'm Phil Muscatello. Are you in the stock market for the short or the long term? And how do you incorporate your values into your life in the markets? Joining me to discuss all and much more is Anmol Singh from Live Traders. Hello, Anmol.
Thanks for having me. Looking forward to chatting with you.
Oh, thanks very much for coming on. Anmol Singh was born in Delhi, India, and went to Brunel University. He started trading in his dorm and saved enough money to legally start multiple franchises and move to America. At 22, Anmol established himself as a successful trader and has been featured in many major media outlets. Today, he and his team at Live Traders show people how to execute trades, review different scenarios, and control their emotions. So let's go back into the past. What was your first foray into the markets? Was that in India or in America?
Yeah, my first foray was actually in London. I was in my dorm room. This was the first year of university. And everybody, started to talk about what's the career path, talking about their internships or future goals and programs. And for me, I wasn't able to get even an internship. I applied to a lot of different places. I wasn't able to get in anywhere. So it really dawned on me that, wow, what if I graduate with this great degree, but then not able to find a job? So that's where I kind of started looking into maybe I need to find something else that I need to do. And it typically just started off with going online on YouTube, watching a lot of videos, reading a lot of books on that subject. And then in our university, they used to have different societies, like an entrepreneur society, different sports society. I was like, there's nothing for trading and investing. So that's kind of me and my friend. We both had a keen interest in the stock market. So we started in college, the Trading and Investing Society, where like-minded people would just meet up once a week. And we just talk about the markets, try to learn together. And actually, the great part is that society is still in existence till date, which is awesome.
So was that trading on the FTSE, or did you go straight to S&P 500?
I went straight to the U.S. stock market.
Yep.
I think maybe that's because the resources available online were primarily for the U.S. stock market at that moment. So I think that's kind of why I went into it, yeah.
Yeah, was it simple to trade the market from London at that stage?
Yeah, it was actually pretty good. I think it's the perfect time zone for the U.S. market because I would go to my lectures at college in the morning from 8 to 9 to 10. And then I think around 12 or 1 o'clock, we would come in and trade the U.S. stock market. So it fit in perfectly with my schedule. Mm-hmm. So yeah, I really, really enjoyed that.
Did you make any mistakes right at the start?
A lot of mistakes. I actually, believe it or not, I lost money my whole first year of trading.
Yeah,
right? It was a lot of mistakes. Didn't know what I was getting into. I thought pushing the buy or sell button makes me a trader, but as we know, that's not the case. You really need to know what you're doing. So yeah, my whole first year, I was just making a lot of mistakes. But the biggest mistake was really, your own mindset. You're not able to follow through on what you've decided, and that's kind of what it dawned on me that okay, maybe apart from just the trading part, I need to focus also on the mental aspect.
Yeah, that seems to be a big part of it, doesn't it? I mean, I talk to so many people and it's about what's going on in your own head as opposed to just having that plan. Because if you have the plan, that's great. But then the emotions start to kick in, don't they?
Yeah, totally. And I think that's half the battle because you could tell somebody, okay, here's the strategy, here's what you need to do. But then are they actually going to do it? That's like a whole different ball game. And then, then the human emotions of fear and greed come into play. you're holding a stock, it's going down. You should technically be out of that, but you think it'll come back up, and that's one of the things. And then you hold a stock, it's going exactly where you thought it would. It goes to your target, but you're like, it might go further. So you just keep holding on. So there's all these emotional battles that come into play. And I think that's half the battle of being a professional trader, is really controlling your emotions.
What were the franchises that you started? Was that in London as well?
No. So I was, in college, just, trading from my dorm room. I was already a successful trader by my third year of college, but I couldn't really move to the United States just based on trading, right? You can't really obtain a visa or things of that nature.
I'm a hot shot with the buy and sell button, so let me in.
Exactly, because they'd be like, okay, you can do that online. Why didn't you need to come into the country?
Yeah.
So that was one of those things. So for me, I started franchise businesses more so as a way of, creating employment so I can finally come into the United States and, work and live here legally. So that's why I started. It was in the auto service center. We'd have people who'd come to get their cars making faster, louder, performance tuning the cars. So I started that business. I didn't know anything about it, but it was just a way for me to get into the country, get my foot here, and then, eventually just transition into trading full time.
Gee, what sort of cars? Was this in London? You were actually doing the auto care stuff in London too?
No, this was in New York.
Oh, in New York, yeah.
So after I went to London for college, I finished about 4 to 5 years. I lived there, did my degree, got my degree and everything. And I was already making a decent amount of money at that time from trading. So the franchises were starting in New York just as a way for me to legally work and live there. So that's the only reason I really started. It wasn't a passion project at all.
Oh, okay.
It was more so... more so just to make it there.
So you don't want to talk about hotting up cars or anything?
No, exactly. My best decision was when I actually sold the business, which was right before COVID. So perfect timing. Mm-hmm. So that was my, kind of the best thing. I sold that and, I've just been trading full time since 2010 now. Well,
as the name of this podcast suggests, we're talking about stocks for beginners. So someone who's, they're tuning in for the first time today, how do they start to decide about what kind of investor they are in the stock market? Whether they're a long-term trader or whether they should start exploring the short-term trading side of things like someone like yourself?
Yeah, I think the first step that people need to do is they really need to think about how much time do they have to devote into it, right? Because if you're somebody who already has a job, you already have a business, you're not going to have time to do what professional traders do all day long, because that's a job in and of itself, right? You have to be there to actually execute on those trades. So that style is not really right for everybody. The best style that I recommend, everybody should be a long-term investor, in my opinion, because that is something that is a wealth building style. So the way we talk about it is there's two types of trading and investing. One of them is income producing, where you're actually trading in and out to generate an income to pay our bills off or to live off. And then there's a style known as the wealth building, where you're taking an account and your goal is just to keep growing it for the long haul. Now, the wealth building style, everybody should be doing that, right? And the way to determine is basically say, hey, how much time can I devote into it, right? And also how patient of a trader you are, right? Maybe you're not patient. Maybe you're not able to hold on to stocks for the long haul. Then maybe your mindset is more suitable towards short-term trading. So you really need to think about, what my time horizon is, how patient am I? How much time can I devote into it? And more so, do I really have the desire to actually learn to do this properly? Because if you don't have the desire, then don't bother about trading and any of those things. Just focus on investing into the markets, generate a consistent, reliable income for the long haul. I think that, in my opinion, is the style that everybody should be doing.
And is your style of trading based on technical analysis?
Correct. So when I am doing the income producing style, where I'm actually day trading, I'm doing short-term trades, holding stocks for a few days to a few weeks, that is all based on technicals, right? Because fundamentals can't really tell you what's going to happen 3 days from now. Fundamentals are more applicable for the long haul. So when it comes to trading, it'll be only technicals. When it comes to investing, it'll be a mix of fundamentals and technicals, meaning I'd invest in companies that I like, I trust, I find that they're going to be fine in the long term. That'll be kind of my fundamental bias, but I'll still time when I'm going to get in based on the technicals.
And what are your favorite kind of indicators that you suggest beginners start looking at?
Yeah, I actually don't use any indicators. I use just a candlestick charts with volume,
Yep.
typical price action, because all the indicators are formed based on the price. So price always happens first, and then the indicators are calculated later. So they're always technically lagging. So the best way that I could sell, and also to keep it simple, is just to look at the chart and learn how to read the price history of the chart, know which cycle or stage we are in. And that's all people need to look at. They don't need to focus on fancy patterns or fancy strategies. Just be on the right cycle, like the bell curve. If you imagine a bell curve, just be on the right cycle of right side of the bell curve, and it doesn't matter if you're going to get the exact correct entry or the bottom. As long as we get the meat of the move, that's pretty much all that matters.
At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
At Staples Business Advantage, furnishing your office is easy. And with the best warranty in the business, we're committed to you now and down the road.
Sign up today and save 20%.
Staples Business Advantage.
Business is
Human.
So just describe a candlestick chart for listeners. I know it's hard in an audio format like this, but they're the ones where you get the you can kind of see the price movement on a particular time period. Is that the case?
Correct. So each candlestick typically looks like a bar. There's two types. There's either red colored or green colored. Green color would basically mean that it went up from where it opened, right, for that period. And red one, which primarily would mean it went down. So the way it will work is just imagine like a bar. The bottom price of the bar is where the stock opened. So let's say the price is $32. Now the stock went up as high as, let's say, $32.50, right? And then it came back down and closed at $32.40. So then there'll be a little wick at the top, which will say how high it went, right? And then the top of the bar would tell it where it closed. So that's just like a typical candlestick. But what candlesticks do is then a bunch of candlesticks come together to form patterns. And then those patterns are what we're using to create strategies. And then those strategies are what we're using to trade off and make money. Now, they're primarily just statistically based. It's simply a matter of, on a losing trade, let's say if I only lose $1,000. On a winning trade, if I make $2,000. Now, by that measure, I could be right 40% of the time, so wrong 60% of the time, and still end up making money. So it's all just a matter of statistics, is how trading really works. At our firm, is just to be right 40 to 50% of the time. That's all we need to do. But just make sure the winners are twice the losers, and then the math always works out, and then you end up being profitable. And
a lot of listeners, I just wanted to say those candles, there used to be an OHLC, or you can still do an OHLC kind of representation, visual representation, but it's not quite as useful, is it? That's the open, high, low, close kind of representation.
Correct.
But a candle's gives you a little bit more of an indication of something that you can visually look at and work upon.
Absolutely. So candlesticks just make it visually easier to spot, because when you look at an OHLC, they will have a bunch of lines, but you really wouldn't know if it went up or down at first glance. Whereas by looking at a candlestick, because it's green or red, like just at first glance, you know if it went up or down. So it just makes it visually easier. But in the end, they both are telling us the same thing.
There's also a school of thought about that you can actually study the candles themselves, isn't there? You're not part of that kind of movement?
Yeah, there's the school of thought that looks into different candles and what they mean. But I think that's a very limited view of candlesticks, right? Because what also matters is where they're forming, how they're forming. Because what if the stock has been running up 10 days in a row when that candle forms? That's going to be completely different than seeing that candle after the stock's been going sideways. So where it forms, how it forms, right, has a lot to do, and the prior history of the stock has a lot to do with it as well. So I don't really subscribe to the school of thought of just reading a candlestick. It's more so in the relation of other candlesticks where it is located.
You mentioned a little while ago that you're looking at trading over a period of days or weeks. Is that kind of time horizon that you're looking at?
Correct. So I have three styles of trading. One of them is day trading, where I'll be trading in and out every single day. And typically a trade I might be in it for just a few minutes. That's taking advantage of smaller price moves, but with maybe a larger quantity of share size. to make an income. Now, the second style that I have is called swing trading, where we're just trading the swings on the daily chart. So a typical trade might last 3 days to maybe a week or two. That's kind of the typical time horizon. So that'll be swing trading. We're taking advantage of small price movements. And then there'll be investing, where typically I have a basket of stocks that I like and enjoy. And those I will hold on for the long haul. And I will just keep dollar cost averaging into those for the long haul. And that'll be my long-term portfolio. So those are the three different styles that I employ into my trading.
How do you interact with your own values in how you approach markets, Anmol?
Totally. So my top value is, integrity and morality. Now, what integrity really means, the way I define it, is doing what you said you're going to do, and then doing it when you said you're going to do it. Now, if you're a trader with integrity, you're going to be having a really fruitful career, right? Because you said you're going to do something, and then you just do it. There's no questions. Whereas a person which lacks integrity in their trading would more so be like, it hits their target. They're like, oh, maybe it'll go back up. And then they'll just keep holding, or the stock is, going down. They should technically be out of it based on their plan, because they said, if I'm going to buy the stock at $10, if it goes down to $9, I'll get out and take a small loss. But when it goes down to $9, they're holding because, you know what? It'll come back up. Maybe it'll come back up. So that's a lack of integrity when it comes to your trading, because you said you're going to do something and then you don't do it. And that is a recipe for a very tough career, to say the least. So that's my biggest value, and I teach that to all my students and members at our firm, is that make a trading plan. Just like when you get into a business, you have a business plan. So when you're getting into investing or trading, you should have an investing or trading plan. And then all your goal is to just get yourself to be emotionally strong to follow through on that plan. So those values, I think, not only just in trading, I think it affects all areas of your life.
And presumably you have to hold yourself to account. I mean, if you have a job and you do a bad job, the boss is going to tell you that you're doing a bad job. But you're by yourself in this situation, aren't you? And you're only fooling yourself if you don't hold yourself to account based on your own integrity.
Absolutely. I mean, that's, I think, the biggest reason why a majority of traders fail, because, as you said rightly, they come from an environment of being in a job where they have a supervisor, they have a boss, they have somebody looking over their shoulder. And if they don't do what they said they're going to do, guess what? They're going to have consequences, right? As part of the job. Now, with trading, you are your own boss, right? You are an entrepreneur, pretty much. There's nobody holding you accountable. There's nobody coming after you. You have to create that accountability and the consequence structure for yourself. So at our firm, when we have traders, we usually pair them together as accountability partners. And their goal is to keep each other accountable. And then there will be consequences. Hey, if you break your plan, you have to, PayPal him $100. Or if he breaks his plan, he's going to PayPal you $100. And soon, lo and behold, you're like, okay, I'm getting tired of sending $100 every single time. And then you end up, just falling through on your plan. So creating those type of accountability structures and consequences are imperative when it comes to trading success. So
you have three questions that you ask people to ask themselves when defining their values. What are those three questions?
The biggest top questions would be just to determine. There's two types of values. Ones are your current present values that you have right now. And then there's values that you want to cultivate, right? So maybe you want to do something, but you're not really there yet. So first, we got to define what our current values are. So the way we do that is by taking a look at, what do I spend my most time doing, right? What do I spend most of my money on, right? And what do I surround my space with? That'll tell you what your top values are. So if you come to my place, you'll find, a lot of books, a lot of art, a lot of those things. So then you clearly can tell I value knowledge, right? I spend majority of my time reading or watching videos. So clearly learning is one of my top values at the moment, right? But maybe there's a value that I want to cultivate. I want to cultivate a value of health, a healthy mindset of being, eating healthy. But maybe my actions are not showing that right now. So even though that is a value that I want, but that's not a value that I have at the moment. So first, we're going to distinguish between what your values are and what values you want to cultivate. And then you'll have to work on that. That's the whole process.
Let's have a look at the emotional roller coaster. What are some of the common features of a trader's emotional roller coaster?
Yeah, I think the emotional roller coaster really comes from when we're sitting there without a plan and we're just looking at the chart. Because charts always keep going up and down, and so do our emotions also go up and down with the chart. Because if you're in a stock, it's going up in your favor, and you're feeling really excited.
You're getting excited.
Really happy. Yeah. You're just like, yes, it's going. I'm right. And then suddenly comes a big red bar, and then the stock starts pulling back down. You're like, oh my God, why is this happening to me? And then you start being negative. This always seems to happen on my trades. I don't know why. What's wrong with me? You start going into that mode, and then you see it go back up again. Then you're like happy again. So it's that roller coaster. And research has proven that, trading releases the same hormones of dopamine and serotonin, the same ones that people get from gambling and, doing all sorts of activities. So as a trader, we have to control that in real time, right? Those hormones. So, and that's a real thing. So, that's the emotional roller coaster. But the key to being successful is being unemotional and controlling it. Now, you can't really truly be unemotional all the time, but you can control it. As long as you don't act on those emotions, that's, the step in the right direction.
What is that point where you reach? Is it about having a plan? Is it about journaling? What are the kind of techniques that you espouse to get over that emotional roller coaster?
Yeah, definitely. I think the step one is obviously having a plan, because a plan really eliminates a lot of the gray area, right? A good trading plan is not going to have a lot of gray areas. It's going to be black and white, meaning if, then, this, that statements, right? So you're basically following through. So now, if you have a well-defined written trading plan and you're just following through, it eliminates a lot of those noise and emotions because, well, this is what's written down, and this is how you're going to manage the trade. So that's step one. Step two is obviously journaling your thoughts. Now, some of the students actually use a physical journal. They write down what their thoughts were and, why they took the trade and how they were feeling. Some people, which I have recommended, they actually video record themselves while trading, because it's super fascinating when after the trading day, they watch themselves trading. So their screen's being recorded, but also their camera's being recorded. And you can just see their emotions like in the camera, like, doing this or feeling jittery. And that's a way for me to kind of tell and coach the trader, like, hey, just look at yourself. Like, you're being so emotional in that moment. So I think that's another step. So journaling, recording yourself. And then step number 3 is to actually track your trades on a spreadsheet. So are you moving forward or not? So it's very easy to lie to ourselves. Like, yeah, I'm a great trader. You convince yourselves, right? But then just look at the spreadsheet. Are you actually making money? Is it actually working for you? If not, then the spreadsheet will also tell us what we can fix, what we can tweak, what we can optimize to get ourselves closer to that profitability. So those 3 key characteristics every successful trader has. And if you're going to be successful, you need to have all those things of, tracking, journaling, and looking at your emotions.
Can you describe a case study of one of your students and just describe what their journey was like, going from being over-emotional to being able to execute a plan?
Yeah, totally. I mean, in fact, I'll give you my my own starting out when I was early in my trading. So I joined, this is in London. I was in my dorm room, and I joined a prop firm in New York City. So I was trading remotely for them from my dorm room. I was working for that firm. So I was trading their capital in exchange for a percentage of profits that I used to give them. And at that firm, they had all these levels, like level 1, level 2, all the way to level 10. And they had targets. If you hit, let's say, $300 a week, 2 weeks in a row, then you go to level 2. Now you got to make $500 a week, 2 weeks in a row. Then you go to level 3. And they had all sorts of these targets. And I did really, really well going from level 1 to like level 7 in the firm, where at that point I had like a $10 million account that I had to trade with and make money on. But then I kind of plateaued. I got stuck there, and I just wasn't able to follow through on my trading plan. And I would, get into a trade. I would set a target, let's say 2-to-1 risk reward ratio, and it would go like 1-to-1, and I'd start feeling jittery. I'd start taking my profits early, and then I'd watch it go to 2-to-1 anyway. I watch it hit my target, but I got out early. And then I would write my thoughts down in my journal. Got out too soon. I should have held it. And then I did that for every single trade for the next 3 months. And I actually physically printed out the chart of the stock, marked it by hand where my entry was, where I got out, why I got out, my thought process, and I also tracked a lot of my trades. What if I did hold them till my original target? How much would I have made then versus how much did I actually made? And the difference at the end of like 3 to 6 months was staggering. Like, I could have already progressed up the firm. I could have hit my targets. But because I got out early on a lot of those winning trades, I missed the target. So then it dawned on me that I'm actually a good trader. I'm just holding my own self back, right? Then I'm kind of holding myself back. And that was one of the biggest realizations. And I had a lot of nights where I, went into my toilet looking at myself in the mirror and be like, what is wrong with me?
Taking a good, long, hard look at yourself.
Yeah. Like, why do I keep getting out?
Yeah.
Like, everybody, I know what the right thing to do is. Why can I not do it? That's so ridiculous. And I thought about quitting many, many times at that point. But then, I just pulled through. I looked at my spreadsheet and said, the spreadsheet's making money. So it's clearly me. So if I fix me, I can progress further down. And that was a turning point where I was like, okay, I'm going to give one last shot to my trading, but I'm going to give it the right shot, do everything I'm supposed to do. And then let's see where we end up. And that was the best decision ever.
What is a prop firm? I mean, I know what it is, but describe for listeners. It's a fascinating idea, isn't it? That someone's just going to give you some money to trade and you just basically live and die by the outcomes of your trading.
Correct. So a prop firm is basically, let's say, a brokerage firm, so to speak, but they have their own funds. Let's say a brokerage firm has a $100 million account. Now they have 100 different traders. They might give each trader, let's say, $1 million each, and we're basically trading the firm's capital. And they would make money because they would take roughly 30% of everything you made in exchange for giving you the money to actually trade. So that's a really good for younger traders starting out. Because as younger traders, we don't have enough money saved up. We can't really, trade with $5,000 or $10,000. Really, we need a capital size. So what the firm allows you to do is it gives you all the softwares, all the tools, all the money to trade. Now, you can't actually lose all their money because they will even though they might be giving you $10 million. If you lose, let's say, $5,000 in a day, it automatically shuts off the platform. So that was good because that's forced risk management, right? Which most traders don't have. Most traders lose because they keep going when they're losing. Whereas at the firm, if you have a loss target, if it's hit, you're done for the day. Come back tomorrow. They might have loss targets for the week. If you get done for the day, done for the week, come back next week. And at the same level, you'd also have profit targets. So it was actually like a, approach that was very binary. You can see your progression, which actually really helps. Because as an individual trader, that's one of the things we don't have is a progression path.
And do they give you a plan to trade with, or are you basically left by yourself for that?
You kind of make your own trading plan. So everybody, the firm will trade a little bit differently. Everybody has a different style. They only give you the risk management parameters like, hey, you can't lose more than X in a day. You can't lose more than X in a week. And your profit targets to get to the next level are to hit this goal, but hit it twice in a week. If you hit it once, you're not going to get promoted. You have to hit it 2 weeks in a row to get promoted to the next level.
So what do you think the danger signals are that show you that you're not cut out for trading? I mean, it's not going to be for everyone, is it?
Yeah, I think the danger signals really are if you're a really emotional human being, right? If you're really, really emotional, you wear your emotions on your sleeve, you wear your heart on your sleeves, and you are affected or act by everything, it's going to be a tough business. People who really make for great traders that I've found after coaching many traders are ex-pilots make for really amazing traders. Why? Because, they're used to having a checklist. They're used to following a process unemotionally, right? And doing it every single time. Pilots make for great traders. Ex-poker players make for great traders because, again, they know when to hold it, know when to fold it, right? They know all of that. And they also are not averse to risk. So they make for great traders. People who don't make for good traders are people who are risk averse, right? Your fear of loss is stronger than your hope for gain. Great traders, their hope for gain is stronger than their fear of loss. So if that's the case, if your fear of loss is stronger, then it's going to have a tough career. If you're emotional, it's going to be tough. And also, if you cannot create accountability, self-accountability, that's also going to be a tough business as well. Because again, there's no boss, there's no employee, and it's very easy to make a mistake when it comes to trading. Just close your laptop. Nobody will ever find out that mistake that I made, right? It's very easy to hide behind a computer screen. So having self-awareness, self-accountability is really important and imperative for a trader's success.
And you'd also think that it would be important to look at yourself and look after yourself emotionally, physically, health-wise. I mean, there is the cliche of the trader sitting behind the computer screen with, cigarettes and drinking too much coffee and basically not looking after themselves. But that seems to me to speak to being a slave to your emotions.
Yeah, typically, if you have to do things to control your emotions, then you're still emotional. You're just putting a Band-Aid on it. And sooner or later, further down in your career, it'll come out in ugly ways. So I always tell people, trading is the biggest personal development journey that I've embarked on. I've learned so much about myself and my own psyche just by being a trader. Because as you said, rightly, you have to control everything, right? You have to be unemotional. You have to be in the moment. You can't be super unhealthy. You can't be partying all day and coming back and expecting to be your best in the morning, right? It doesn't work like that. So it's a very disciplined career. It's the closest thing to a sport, Just like in a sport, not everybody's going to get picked for the team. Not everybody's going to make it, but the top people are going to make it. Why do the top people make it? Guess what they're doing? Michael Jordan. He's reviewing game footage. So what are traders doing? We're tracking our trades. We're reviewing our journals, right? Professional sports people are watching game footage of their opponents. They're seeing what I can tweak, fix, optimize. And the same thing with traders. Traders will have that mindset of, it took me 5 seconds to get my order in on that trade. How can I get it down to 4 seconds? Like thinking in those terms, like a sport, is the closest analogy that I can provide.
And it's also important to understand emotions, even if you're just a long-term investor as well, because so many people with their long-term portfolios have sold at the bottom and started buying in again when it's too late. And, this is a really important thing to understand about yourselves, because the emotions you feel with money can trip you up sometimes.
Yeah, and I think it has. And I think that's kind of what makes the market move, right? Like somebody needs to sell for you to buy, and somebody needs to buy for you to sell. So there's always that polarity. And as we always talk about, stock market runs on just two emotions, fear and greed. And all we're trying to do as traders is decode which phase we're in. Are we in the greed phase or are we in the fear phase, right? So just a few weeks ago, actually in December, the whole stock market was crashing or coming down. We were down 35% for the year. And you could see a lot of people were fearful and a lot of people were being controlled by the fear. So we always end up doing the opposite. That's the time we end up start buying, right? And now when the stock market was going up, everybody is, extremely bullish or greedy. And, you start seeing NFTs and all these things start going all over the place. That's when we know as a trader that, okay, maybe time to start selling into them, right? Maybe start to get out of that. So emotions play out no matter what type of trader you are, long and short term. But as a long-term investor, what you need to do is, as you said, hey, I'm a long-term investor. So if you're a long-term investor, then don't look at things every single day, right? If you're going to trade for a living, don't trade like you have to retire next week, right? Trade for the long haul. And if you're investing, as the word says, you shouldn't ever be pulling out of the markets unless things get really, really insane. Because the stock market has always been higher than what it was the past 10 years, always. So if you just maintain that position, you dollar cost average, you slowly grow your wealth, and you every month you contribute something from your job, from your income, you're putting it, auto investing it. That is a surefire way to take care of your wealth down the line in the future.
So Anmol, if people want to find out more about live traders, where can we direct them?
Definitely. I have a free gift for our audience. If they're more interested about learning about trading and investing, they could go to livetradersguide.com and you'd get my free checklist and my free guide and also an introductory course. That'll give them a really good perspective on whether they should even get into trading in the first place. And then that's kind of where they can start their journey at livetraders.com.
Anmol Singh, thank you very much for joining me today. It's been a pleasure chatting with you.
Thanks for having me. It was great chatting with you.
Thanks for listening to Stocks for Beginners. If you enjoy listening, please take a moment to rate or review in your podcast player, or tell a friend who might want to learn more about investing for their future.
At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
Recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
Let Staples Business Advantage use today's latest innovations plus our team's experience to make furnishing an office space easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
Human.